Good evening, everybody. All right, nothing real exciting in this market, but the one big factor that we can take advantage of is recognizing that the T line is still acting as a resistance level in the Dow. The NASDAQ didn't do much of anything today. It was down 4 points, but kind of telling us that there isn't the magnitude of power that we would have thought coming out of this pattern or this signal. And if it opens lower tomorrow, kind of tells us we're just in a sideways range, which is obvious. That's right now that we're seeing down days, up days, down days, up days. So it's just not a real powerful move in the markets at this point. The other indicators, crude oil, for example, just kind of pulling back. And I say pulling back. It hasn't reversed. You can see how crude oil has just indecisively come back to the T-line, which still gives the impression they're not selling it off hard. They're just kind of consolidating. Gold also kind of in a slow drift here, not anything major going on. So those two sectors have kind of dissipated as far as a bunch of opportunities. The opportunities still seem to be in the biotechs. As we can see in the Labu ETF, it's acting pretty strong. So those are still working well. Over in the futures area, I was kind of given an illustration today in the newsletter. And this is where you kind of observe the obvious, where they fail right at a major resistance level, like the 200-day moving average, use the 50 as a resistance, came back up to the 50 one more time. But what was our signal? That maybe they weren't going to get through the 50. Because look where they were when they gapped it up. So it told us either one of two things. Either this 50 was not going to act as resistance, or we'd reach our exhaustion once it got back up here. And the fact that they couldn't move it from this direction and started selling it off gave us a pretty good impression that this trend channel was in effect, that we could be coming all the way back down, at least testing this level. So today they gapped it down and went down the limit on live cattle. On feeder cattle, kind of the same scenario. Came up to the 50 and failed. Today they gapped it down and put it down the limit, making this downward trend channel kind of the obvious target. So the fact that we can see where the resistance level is, what type of signals we have at that point, and what type of selling occurs gives us a much better feel or visual analytical prowess to say, oh, they're selling this off, and what's the trend? They can probably be back down into the trend. Let's see. The same thing was happening in lean hogs. This is where knowing where a signal is occurring is highly advantageous in the sense that you pretty much control a resistance level right up through here. And that's where this little hanging man failure occurred. Stochastic's heading down. It gives us the impression that our next, we did this wrong. Not wrong. Since we know there's probably a good possibility they could be in a trend channel, we do that same scenario that if this is the top and your parallel line is here, this is where the likely target could be, is right down in this area. So once again, it allows us to say, all right, what's happening, or see what's happening when it gets to this level. And if it fails at the 200, let's see if something happens here. When I say something happens, we see another reversal like this, then we pretty well know that was the reversal at the bottom of the trend channel. Again, this is not rocket science. This is just watching to see what everybody else is watching and what they're doing at particular levels. Now, there's other times where you have to decide whether a trade is still working or not working. So soybeans was in an uptrend. We recommended this a few days back, with the idea that if it closed below the T-line, you want to be out of it for two reasons. One, would tell us that this trajectory that we were expecting, the J-hook pattern in this uptrend, was not following through. And two, with it closing below the T-line, it told us we're probably in this type of channel, which is not a great channel to be long. So could it be doing the same thing as here? Definitely, but right now we should be out of this trade because it closed below the T-line. Just told you that they weren't moving any place. And this is where you have to use common sense or visual common sense to say, wait a minute, this is not doing anything that shows the bulls are in control. So why would I be in stay in a position where I can't see that the bulls are in control, that it could be doing one of three things from this level? Going this way, going this way, or going this way. And we want situations where we can see where the probabilities are that they're going in a certain direction. That was soybeans. And this is wheat. So another situation that tells you, all right, we're in a big sideways trend channel. So if I was trading this tomorrow, I'd be doing it on the basis that probably right here is the support level. That means I got to be pretty nimble, that if I see it get down here, if I was short, or if I decided to go short tomorrow, as soon as it hit this level, I would flip to my 10-minute chart and see what's happening here. If they're showing support there, then you just take your profits on that trade. Let's see what else we got. The dollar. Dollar, as you can see, is up in the overbought area. We've had a doji. After hours is trading right about the same level. That kind of tells us what happens when they come up, hit a resistance level, pull back, and go through. What's the next step? They'll usually come back and see if it's going to act as support. So if I was going to trade this tomorrow, I'd simply put a sell stop below today's low. Let's make this big enough where we can see it. Because logic would say, if they're starting to sell off from here, where's my first likely target? Either the T-line or the 50. It could be, Jason. Again, it's all depends on what the psychology is at the time. Now, I wouldn't think the meats are going to be weak because of the strong dollar, because most of the market for the meats are local, meaning most of the market for the meats are right here in the United States on local market basis. So that wouldn't be influenced as much. So going back to which sectors are the strongest, we can see that Labu is trading strong. That means we want to be in those sectors, or stocks in that sector, like our ACAD. Ever since it double bottomed here off the 50 with a Morningstar signal, told us there was that little scoop pattern that we want to stay in that sector for a while. AVXL gapped up through the T-line. Where's our next likely target? Probably the 50. So that still gives you a good, probably about a 12% return. And you know you're probably heading in the right direction as long as it stays above the T-line. And Kara also has a nice little breakout or breaking the downtrend. Makes for a very simple trade tomorrow. If it opens positive, telling us the 50-day moving average isn't going to act as resistance, there's a good possibility we're in wave 1, wave 2, going into wave 3. which could put you back up into this trajectory. So that could create a good 80% upside potential on that trade. Now, anytime you see a trade, I mean, not every stock in the sector is going to work nicely. Today, SRPT looked good on a positive open because of the left-right combo gap up. But with it closing back down here, bearish engulfing, what did that tell us about our trajectory? That the bulls weren't there anymore. Close out the position. Now, I say that glibly, but you should close out the position big FBA decision, all right. And the reason I say it quickly or like matter of factly is because I know that anytime I'm in a bad trade, close it out. Because that's that part of that 33% of probability that you're in a bad trade. Move on to something that can give you a high probability setup. And that's the one thing that I had to kind of squeak through emotionally for a good while was if I was in a bad trade, I had to fight through my emotions to say, oh man, what did I do wrong with my analysis? And the answer is nothing. Your analysis was based upon that being a good trade setup, but if you always keep in the back of your mind that you've got the possibility that 1/3 of the trades aren't going to work, that takes the emotions out of it. You just tell yourself, all right, this didn't work. Let me move my money back into something where my probabilities are 2 to 1 that I'm going to be in the right place. So if you had time to close it at the halfway point, the fact that they probably came down through this level told you that something was wrong. But the fact that they closed it well below the low of the previous day, which was what got you into the position in the first place, was that gap up. That told you there's not strong buying going on. There's strong selling going on. So just close it back out. And as I say, just close it back out. I've discovered that anytime you see something that's not working, if you stay in it, what's your decision-making process at that point? You're hoping that it's going to turn around and head back up. For all we know, there'll be another doji day, or they sell it off again. So this just told us it wasn't doing the pattern or revealing the bullish sentiment that we thought was happening. Rich, every Monday and Thursday, we put out a newsletter on kind of the markets, usually on YouTube. And I'm pretty sure all the members get it, don't they? So you do a small, if you don't get something like that, I forgot. Let me see. Hold on for a second. Let's see what Abe has to say about that. Now, it's not the same as the daily stock picks. It's not your morning or afternoon comments. Oh, is it called week ahead? All right. Okay, what was I doing? Hitting CWEI. This one we recommended today. You can see the pattern, the fry pan, the J hook, but it didn't execute today. But what did it do? It told us it consolidated and that this pattern is still in progress. So when a pattern doesn't execute, but it's still showing that the pattern's in progress, still makes for a very easy entry. If this opens positive tomorrow after today's consolidation, that J-hook pattern is still in effect. And where do you think our likely target is going to be? Up here to the 200. Wave 1, wave 2, wave 3, the same as wave 1. So this is why you want to definitely know what your patterns look like, so that if something doesn't execute the first day, keep it on your watch list. The ultimate entry may be the next day. Then when they gap through a resistance level, and this is just kind of human nature that you should keep in mind. Let's see. Hold on, Abe's coming back with. All right. Also, Abe is saying, check your junk mail. Sometimes it gets kicked over to the junk mail, and then I guess over there you have to say this is not junk mail. Let it come in your box. Might try that. So, anyways, this is the psychology of human nature. Is if they are gapping it up into what they can observe as a resistance level, that tells you they're probably not going to stop here. They're not gapping it up to quit right here. They're probably going to go through. Okay, I'll have to find out why that is happening. That's interesting. All right, that's supposed to go out to members every Monday and Thursday. And RLYP, another little gap up. And notice where it closed today, right on the 50. Makes this very simple. If they open this positive after the profit taking today, tells you the profit taking's over and the 50 is not going to act as a resistance. Still making the 200 the likely target. IAC, this one you can buy on positive trading tomorrow. You've had a left-right combo. Today, did indecisive trading. Very simple entry. Put the buy stop just above today's high. That would give you kind of a doji sandwich breakout potential. And if this is wave 1, wave 3 is going to be the same potential. And I say same potential in the sense that the probabilities are pretty high. That's the type of pattern. When you say buy on positive trading tomorrow, what we don't want to see, Andre, is that you wake up and the pre-market futures and the Dow are down 140 points, and the stock that you're looking at to buy is opening down into the previous day's candle a good distance. So to me, positive trading would be, today this closed at 1254. So if it opened at 1248 and then started trading positive, meaning it came back up through the previous day's close, yeah, that to me is positive trading. At the same time, I wouldn't want to see the Dow trading off where it was heading down 200 points. That would tell me I probably don't need to jump in right away. Positive trading to me is the market's somewhat stable, and the stock that you're looking at is moving in the right direction. CEQP, where did the fry pan bottom breakout occur? Right here at the 200. This is a high probability trade because it's telling you two things. You got a doji sandwich breakout through the beginning of the pattern and through the 200. If not so much the breakout of the pattern, you can pretty much guess that everybody and their brother is watching to see what it's going to do here at the 200. Now that it's gone through, that's where the enthusiasm will come in and kind of verifying. Verifying that the 200 is not going to be acting as resistance anymore. K2, little gap up. And you're out coming out of the oversold area. You've had this big basing and that gap up. That tells you there's been a change of investor sentiment. What is the light blue line? That is the 20-day simple moving average. So you've got the 200, the 50, and the 20 simple day moving averages, which is what everybody in the world uses on their charts to make their decisions about their portfolios. I say everybody, all the big money managers. XL, J-hook pattern. All you can do here is stay long, realizing that this uptrend is going to stay good as long as you stay above the T-line. QLIX, Doji, right 100. You've got the bobble potential. If it opens positive, you've got the Doji sandwich breakout potential at the resistance level. Creates a very high probability trade setup. And TRA, kicker signal off the T-line. You're right back in this trajectory. Expect a 45-degree come off of here, and you'll probably stay that way for a while. And LRCX, anytime you see this big move and they sell it off, then they open a positive the next day, pretty much tells you the profit taking's over. This still has a good trade setup. If it opens positive, that tells you all the profit taking's over and they're starting back up again after your best friend signal. Remember, that best friend signal just told you there is a lot of energy coming into this price move. Scotty, just wanted to show this, that if you own this from here, your first anticipation should be seeing what it does here at the T-line. Don't know whether it would be time to start selling off, but there wasn't really any selling. But the fact that they took it up through the T-line told you there was going to be more upside. Had they opened this lower, pretty much told you the T-line was the bounce and you should be back out of the trade. Huntsman, this is where you observe the obvious. The obvious is they were supporting right here on the 50. You can pretty much draw a trend channel right up through the bottom here. And where's your next target? You draw a line right up through the top. So you've got a good 20% upside potential. What was a ticker before? Oh, this is a guessing game. This is LRCX. Lam Research. And KeyW, this one is just to show you, look what the trajectory of the trend was. Then there was a pullback. This is what usually happens. They see power coming out of here. They'll usually take it right back up to the trend channel and then continue that trend channel. So this is the area where you can hit some big licks real quick, knowing that this is the potential target. There's your T-line crunch, little bobble setup. Nothing wrong with buying this on positive trading tomorrow, because you have wave 1, wave 2, the T-line crunch pushing you back up through the resistance level, making wave 3 the same potential as wave 1. Again, just high probability setups, but they're pushing against this resistance level. The T-line keeps crunching it up there. Watch for the breakout to the upside. AMD, slow curve, you can still be buying this one. Remember, this is kind of a build-up, that fry-pan bottom build-up, and now look where it's starting to break out, right at the same level it topped out before. Okay, so this is why also you want to identify what's happening. Notice what's going on in Alaska Air, ALK. Got a little wedge formation. You can see where the support is. When do you think this is going to break out? Have no idea. So, best thing to do is right up here. What was the high today? 66.04. 66.15 is the T-line. You put a buy stop at 66.25, because if it comes up through there after this wedge, that means they're breaking it out to the upside. So you don't have to sit here and watch to see when it happens. All you do is put a buy stop up here at a level that tells you if they come up through there, it is breaking out after this pattern. And HCLP, kind of the same scenario. Is it going to get through the 200? You got a T-line crunch, you got a bobble pattern. So the simplest thing to do is put a buy stop up here at 752, 10 cents above the high, telling you they got through the 200. Because if it breaks out, where do you think everybody's watching? Watching right now to see if it's going to break through this 200-day moving average. We have kind of suspicion that it will. So we've got the T-line crunch in progress. All right, on the short side, this is not an unusual situation where when things are rolling over, they do a big pop back up. Now look what's happened. That big bullish engulfing signal, which was not in the oversold area, they couldn't keep it up above the T-line, and now they've closed it more than halfway down this candle. This is still a good short on weakness tomorrow, because it tells us this dumpling top is still in progress. Oh, that you'd have to look at. But if they gap this up and started going in this direction, then you just put your stop at the T-line, which would be a little bit below where you bought it. Because if it came up and came back down through that level, it tells you they didn't break it out. That was just a quick spike. But more than likely, based upon candlestick charts, a wedge going through the T-line resistance with stochastics in the oversold area, if they move it in this direction, that's pretty good probability that the bulls have stepped in at this stage. And VRTU, another one that had, this is where you always want to know the difference between a pattern or a reversal signal and a non-reversal signal. What was this reversal signal right here? Anybody? Class? Class? It wasn't a signal, exactly. All this was an up day. So the reason we want to point it out that it's not a signal is that if this was meant something, after 400 years, the Japanese rice traders, it's not really a morning star signal. Remember, this is supposed to be an indecisive day. It's not a very indecisive day. What is a morning star signal? I'll point one out to you when we get to one. But, so this is why you want to know the difference between a signal and a non-signal. Because a non-signal, especially when you're not in the oversold area yet, tells you this may just be an up day and a downtrend. if you covered it someplace or if you were short, you still have to think, all right, they've still got to get through the T line. Can I short on the next day open? Yes, if this opens lower tomorrow, you can be shorting this one. Still tells you the downtrend's in progress. So I was pointing that one out because there was a non-signal up day. And that was the same scenario in VRX. Notice on Friday they opened it up, brought it up. What type of signal was that? Anybody? None. Exactly right. A lot of people say, well, isn't that a piercing signal? Now, remember, a piercing signal has to open below the previous day's low and come up and close more than halfway. So this is just an up day and a downtrend. Let's see, is this Tribune? I guess that deal is off. I'd be ready to short this one on weakness tomorrow with that kicker type signal to the downside. KLXI, that kicker type signal. Not quite a kicker signal, but probably strong enough to tell you there's going to be a few more days to the downside. Whoops. And CC, this one's a very simple entry. Notice what they tried to do. They tried to bring it back up today. Notice the bulls trying to step back in. So tomorrow, if this was kind of a reversal, what should we see happening? We should see the bulls are still there. If they open this lower and start trading it down, where do you think your next target's going to be? First of all, if they open it lower and start trading it down, what does that tell us about the bulls taking control here? They didn't. So the selling is still going on. I'd look for it to pull back all the way back to the 50. And we'll go from CC to YY, just so we don't have to. There's wave 1, there's wave 2, going into wave 3. This was a 20-point move. This could take you down pretty hard from here. Wave 1, wave 2, wave 3 could take you down toward 20. And VSAT, you can see how it's continuing to fail. And the failure is a doji followed by a gap down below the T line. We're sitting right here on this support level. If it opens lower tomorrow, where do you think the next eventual target's going to be? Probably all the way down here. So those are ones that you want to definitely keep an eye on for going short. And I'm anticipating that some of these have volume big enough that they've got option capabilities. And I say option capabilities. If you've got a stock that looks like this, but it only trades, let's say, 300,000 shares a day, you're probably going to have a fairly wide spread in your options, bid and ask. Now, if it trades 3 million shares a day, more than likely your bid-ask spread is going to be very small because there's going to be a lot of options traded on that stock. Okay, that's about all I got tonight. Market just not doing anything real enthusiastic. You can see the slow drift, and the slow drift may continue for a few more weeks until maybe they pull back to the 200-day moving average. All right, are there any general questions on candlesticks? I'll check with hold on to your individual ones until I tell Rick to do the double line. Oh, we were going to explain a morning star. Let's find a morning star. Here's a morning star. When you're in a downtrend, you have a big down day, then your day of indecision, and then the third day is a bullish candle that has to close more than halfway up this candle. What's the difference between live and feeder? I think feeder cattle, if I'm not mistaken, is fed things like corn and that sort of thing, a different food other than just range grass or hay. Yes, so morning star signal is three-day pattern. Big down day, a day of indecision, and the third day closes more than halfway up. This is one of the 12 major signals. So if you're new at candlesticks, my suggestion would be get the book number 2, High Profit Candlestick Patterns. That will tell you all the major signals and how they look. Now, again, afterwards, this is what we call a McMuffin. Because what did we have right after the morning star signal? We had a doji sandwich. So if you shorten that as a morning star doji sandwich or a morning sandwich, that's your McMuffin. So are they deliverable in the live cattle contract? Yeah. Yes, so feeder cattle usually has special feeds like corn, so you have corn-fed beef and that sort of thing. So anyways, that's your morning star. Now here's your evening star type signal, which is a big up day, an indecision day, and a third day closes more than halfway down this candle. I'll have to see. I'll try to identify a piercing signal as we'll go through here. Yeah, and usually the feeder cattle market is a little bit thinner than the live cattle market, so it moves around. Today, the limit, it was down the limit, which was down $4.50, whereas live cattle's limit was down the limit today. It was down 30 cents. So, that's right. Okay. All right. Thank you, Pat. Yeah, but the market for feeder cattle is a bit thinner. I mean, the price will move around a lot faster. Okay, Rick, go ahead and do the double line. And in 3.8 seconds, do the next double line. I'll try to point out, try to come across a piercing signal. Lenders Club, you can see it just closed above the T-line today with a doji. And what do we know about the doji rule? It's going to move in the direction how they open it. So if they open this positive, you can be buying immediately because there's the first target, and then there's the second target up here near the 50-day moving average. And CYTR, another one you can be buying. You don't want to see this close back below the T-line. But if it opens positive and trades positive, you can be buying it. Just make sure you have a lot of volume on this one, a $2 stock. INFN, nice slow curve. You can be buying this one on positive trading. Expected target being the 50-day moving average. But that slow curve usually shows a lot of power building up. There's a bullish engulfing signal right off the 50. Wave 1, wave 2, going into wave 3. You can still be buying this one on positive trading, which would tell you they're breaking out through that level. Uh-oh. FMCC not found for some reason. And LYB, we were going to short this one had it opened lower. It can still be shorted on weakness tomorrow. You had a kicker type signal got wave one, wave two kind of with a berry scoop pattern. You want to definitely be shorting this one on weakness tomorrow. IDTI, you can see the fry pan bottom setting up. Big, slow fry pan bottom. And what was significant today, they closed it just above the 200, which means if they open this positive tomorrow, you want to be buying immediately, because that tells you got probably a bullish doji sandwich on the breakout, which also makes very simple. If you buy it on positive trading, what should it be doing? A bullish doji sandwich above the 200. So where would you not want to see it close? Back below the 200. If it did, tells you buyers didn't show up, get back out of the trade. Whiting, if you're long, you stay long. It needed to stay above the T-line, which it just barely did today, or it did. So you still got this potential J-hook pattern. You stay long, just don't let it close below the T-line. CPXX, another kind of J-hook fry pan bottom. Notice where they gapped it up. They start gapping it up toward this resistance level. We're long this one. We want to stay long. Netflix. Looks like it's going to the 50. Amazon got a little sluggish today. It has to open positive and trade positive. If it opens lower, now your uptrend is disappearing. You're going to be in a downward, at least a downward trending channel. And Tesla needed to, it's probably in the bobble, which means it has to stay above the T-line to stay in it. If I was going to buy it, I'd wait to see if it hits the T-line and then comes back up through the 200. That's where I'd be buying. Apple had a good, strong day. You stay long on this one right now. Use the T-line as your stop. And JB Hunt, nothing here to get excited about. Still need to see this close above the T-line. You're still in this downward trend channel. You don't really have a reversal signal. I probably wouldn't be doing anything with this one right now. EDU, another one that almost broke out today. So this makes it very simple. If they open this lower after the shooting star, you close out the position, because that tells you they failed at this level. It needs to open positive and trade positive. If it does that, you can still be buying it. STX, stay long on this one as long as it stays in this fry pan bottom trajectory. CNX, nothing yet. If you're short, probably should have covered it today with it coming back up through the high of Friday's doji. Wouldn't be buying it, though, until it does get up through the T-line. Again, trading below the T-line, the probabilities are still against you numerically that the uptrend hasn't started. And blue, you can be buying this one. Just be diligent once it gets to the 50-day moving average. Monsanto being brought out. Whoops, what did I do here? Well, being bought out, but I guess there's a little bit of skepticism of whether they will allow it to go through. And NEO, you stay long on this one. This one we bought a while back. You stay long. The July coffee, we're short. We shorted it today at 12 or 122. I think it was 122. No, I wrote it down. We shorted it, and I think it was not 123.80. Or was it 123.80? It was 123.80. Somewhere up here. well, this isn't working out nice. I think we sold off the 10-minute chart over here. That's no, we're short this one. I can see this is working out nicely. JB, if it's MTG, that's not what you want. You probably want MGT. Even if it's this one, it needed to trade up positive. So you're looking at MT, no, MTB. Well, whatever that one. Oh, that's the problem. I'm on the wrong charts. Let's try this again. MTG. Nothing there. MGT. That one is setting up for a J-hook pattern. So I wouldn't be afraid to be buying this one on positive trading tomorrow. EDZ, all you can do right now on this one is stay long as it stays above the T line. DAR, just a slow, steady uptrend. You stay long on this one as long as you don't see a sell signal and it closed below the T line. Primo Water, if you like this one, you can stay with it as long as it stays above the T line. Now, if this opened lower and closed below the T line, it would tell you it's probably in a drift coming back to the 50-day moving average. W-Wave. W-Wave needed to break out today. I would still be a buyer of this one just above today's high, which was 44.95. I'd put a buy stop at 45 because if it comes out there, you've got that little scoop pattern, J-hook pattern in progress. Nugget was kind of whipping around a little bit today, but unfortunately with Nugget, gold right now is kind of gone into a drift. So Nugget isn't going to act very strong. So that's just now in an area where you probably don't want to be trading the golds until you see a trend set back up. WAB, Westinghouse, air brakes. Westinghouse, I think their headquarters is about 2 miles from me here. As a matter of fact, the house I live in was built for the CEO of Westinghouse. But they never lived in it. They just used it as their entertainment house. But Westinghouse air brake, it's not a very exciting stock, and it probably you wouldn't do anything with it on the long side until it closes up above the T line. Vulcan, just stay with this one. That's a good looking chart. Zillow, another one that has to open positive to stay in it. The doji right here on the T line. If it opens lower, pretty much telling you there's no direction to this one. Ford's also in a non-direction right now. Still like this one long term, but long term has been stretching out longer and longer. Won't do anything on a long-term basis on this one until they get it up above the 200. And Bidu, you can stay long, but it has to trade positive from here. If it closes back below the T line, the trend is not there. Ego, nothing here either. You shouldn't be in this one, and you shouldn't be buying it until it gets back up above the T line or shows some sort of buy signal and takes it up above the T line. Oh, is that a true signal? Let's take a gander here. Doesn't look like it. Looks like that was a bad tick. So you can get ready to buy this on positive trading. Target. Nothing here that would get you excited. If you're short, you stay short. 20-year notes. Nothing here. You can see the wedge. I wouldn't be trading long or short on this one. Twitter. Twitter has also lost its trajectory. Now, it might be coming back a little bit, but nothing major at this point. And there's really no chart pattern that you can latch onto, so I probably wouldn't be long or short Twitter. GPro, that's starting this little fry pan bottom. This is one that I'd be more, there's kind of the little morning star signal. This is one I'd be more apt to start going long on a positive open tomorrow. Now, on the other hand, if it opens lower, we can get ready to short it some more if it's a little evening star signal doing a bearish scoop pattern. And Tazar, all you can do right now is stay long ever since it went through this resistance level. Notice the bobble. So all you do right now is stay long until you see a sell signal. Walmart, after its big move the other day, probably has gotten back up into this trajectory, which means it's not going to be very exciting from here. Just kind of back into a slow trend. So Walmart isn't something that you trade, it's something that if you want to stick away, and I'm not even sure sticking it away for long term is any good anymore. They've gotten so big. Gaps, told you what was happening down here. Lots of dojis in the oversold area, and they told you which way they were going. I'd still be a buyer of this one. We were short there for a while, covered the short position. Now I'd be ready to buy it, because here's your first target. There's your second target to fill the gap. The MLM, Martin Marietta, just stay long, as long as it stays above the T line. And AKRX, stay long on this one. Now, if it opens lower tomorrow, you probably want to take profits. That means it's probably going into a bobble, which means they'll come back and test the T line before coming back up above the 200. Monster Worldwide, looks like all you can do right now is can't do anything. I don't know whether they'd let you short this one, but I wouldn't be in this one right now. Line, whoops, it's not coming up. So I don't know how to help you, Jason. Capstone. This one you can get ready to buy. Just make sure your volume is hefty. But that's a nice little slow curve with a left-right combo, gapping up. Roper. That's a bearish kicker signal. That one you can start shorting. At least you know the first target would be right here, but with that kicker signal, there's probably going to be a lot of people trying to get out. What's the coffee target? Probably the first target is right here. And the second target would be this one right here. So all that means is once it gets down to this level, you see if there's any type of reversal signal. If not, then you look to see what happens once it gets to this level. MGT, yes, buy this one on positive trading. Test. Two, you can be buying this one. I would buy it on a breakout through this downward trend channel, which means today's high was 640. You want to pay 655 for this, knowing that it broke through this downtrending channel. and EVEP. This one you can be buying. Make sure the volume is good. But you had that little doji gap up. You broke this downtrending channel. You can buy this one. Oh, yeah, Westinghouse has never been really all that. Again, Westinghouse being an institutional trader. DLPI is not working for some reason. Oh, explain the kicker. A kicker signal is where you're in a trend, it opens here and closes here. The next day, they open it at or above the previous day's open, which means it already gapped down and starts going the other way. This is your strongest of all the candlestick signals. This tells you there's been a dramatic change. The investor sentiment has kicked the price in the other direction. Boot, I haven't seen for quite a while. Again, not anything real dynamic as far as a reversal, which means you be very careful once it gets to the first resistance level. The Russell, still having a hard time getting out of this downtrending channel. You saw that it was trying to get up through the 200, hit the 20, and pulled back. So there's nothing real wild yet on the Russell to tell you there's any reversal, which is the same thing the rest of the markets are telling you. Okay, I think we got them all. I will find out why everybody's not getting the newsletter, the Thursday afternoon newsletter. And also, just a reminder, if you are a serious investor, we do the private training sessions in August at Keuka Lake, which is in upstate New York, just below Rochester. 2.5 solid days of sitting in front of the screens, going from start to finish. So that if you're seeing bits and pieces of these sessions, going through the whole 2-day session is will put it all in order for you to make you really understand what. And then what happens is when you come to these sessions, they start acting as reinforcement. DLPH, all you can do right now is stay short on this one. Trying to think of what the other. That's a piercing. Well, hold. I was trying to get a piercing signal for. A piercing signal is. I haven't seen one yet. But that's close to a piercing signal. But it's more of a belt hold because of the gap down. A piercing signal usually has a dark candle, and then they gap it down below any of the previous day's trading, and then comes back up and closes more than halfway up that candle. Okay, I will get with Abe right now to find out why everybody's not receiving the Monday and Thursday night newsletters. It's got a YouTube video attached to it also. All right, everybody, have a good evening. We'll see you bright early in the morning.